Greetings, members one and all of the Salivation Nation. There's been quite some excitement, especially in the gold markets lately. And with silver, platinum, and palladium making moves in various different styles and ways and seemingly independent of each other, has brought up a lot of different opinions and about silver, especially. Gold has sort of validated itself, but there's still quite a different views on silver. So we're going to take a look at two different views and how this particular article here is about gold's aggressive move. Gold and silver ratio no longer matters. And then we're going to explore and see if silver's day really is coming for the price increase. So let's explore both of these and see what we can make sense of. First, we'll start with this article about with gold's aggressive move up. The gold to silver ratio no longer matters. Gold's rally to 6-year highs has left silver behind, as reported by Kitco News here, with fund managers repositioning their exposure to gold amid dovish global monetary policies, trade concerns, and rising geopolitical tensions, according to BMO Capital Markets. The gold to silver ratio no longer has much relevance. With gold prices running hard, we have received many questions as to what this means for silver. In our view, the gold continues to receive annuity demand for macro asset allocation trends. Silver does not, and until this changes, we may be looking at a growing disparity over time, said Colin Hamilton, BMO Capital Markets Managing Director of Commodities Research. Other assets stealing attention away from silver are cryptocurrencies, added Hamilton, pointing to the traditional retail investors as being somewhat distracted by the new digital assets out there. Gold, in the meantime, has likely seen the peak of its rally, as most of the changes in risk sentiment have been priced in already, added Hamilton. With June's FOMC meeting acting as a catalyst for the recent run in gold prices, and with prices now at a fresh 6-year high, we believe much of the current macro sentiment and uncertainty is priced in, he wrote on Tuesday. As at the time of this writing, August COMEX gold futures were slowly losing altitude and trading at 14.15, down 0.23 cents on the day. And as you can see here, gold is only up slightly, still under 14.10 here. The overall environment is expected to remain supportive of gold, with new money moving into the space, BMO's note stated. Given the aggression and the move, we do think that macro asset allocators have moved very quickly to price in loosening monetary policy, as evidenced by rapid ETF inflows in addition to length and futures contracts, Hamilton said. Key catalysts behind the recent move, notably a protracted U.S.-China trade war, a switching dovish stance among developed market central banks, and rising geopolitical tensions between the U.S. and Iran have prompted rapid flight to safety. And, it's one thing we'll see as far as trade is concerned with the meeting with President Xi and Trump here, as they are now in Japan now meeting. So we'll see how that reacts. But they see the cryptocurrencies and traditional, and I mentioned that too, and that might be one of the bigger threats, would be cryptocurrencies, but their retail investors are distracted. And but most people that have any amount of money, they're going to be looking at gold probably more. If you have the ability, the way you want to pack as much wealth in a small amount of space as possible for the physical, although the ETFs are another matter. Depending on those, those are electronic, and so you could get into that market with the silver, and that could cause the silver prices to go up if people see an opportunity there. That's one way that silver could be see some sort of a rise in demand if people look there. But you think about it, people that are in that space already, they're seeing some excitement. The flashy thing, the shiny thing now is cryptocurrencies. So then it leads to the alternate here. The silver's day is coming, and will you be ready for it? Gold just broke out of years of imprisonment in the $1,300 range. Long-suffering gold bugs are breaking out the champagne, and some are cashing in. That's great, but for investors still looking to make a lot of money, the key fact is that silver has not yet broken out. And silver's track record tells us that its day is coming in spades. But can past performance be indicative of future returns? No. But let's take a look at here. Gold to silver percentage growth here by the Federal Reserve Bank. We can see it's widening here. But you still see some slight correlation, even though it's widening there. But that's probably the commodity aspect. Silver's lagging but gold by a wide margin. In fact, it's still down for the year. So is silver dead? What's wrong with it? The answers are no and nothing. This is, in fact, normal for silver. I disagree there. Silver prices are more volatile than gold prices. That's true, but they really haven't moved a whole lot, especially with what the markets have been doing recently. Silver usually lags behind gold in the early days of a precious metals rally, and then more than catches up, soaring away above gold in terms of percentages gains. Now, that's an interesting statement, indeed. So it may be close to time if that's the case, if the past is usually indicative, and if you analyze the charts to tell you that. But let's see what he goes on to say. Consider what happened in the last major precious metals rally after the crash of 2008. And so we see gold and silver. Gold is much more stable, and silver was much more erratic, but has pushed trends quite upwards, narrowing that gold to silver ratio. It didn't lag long in early 2009, but it did. The silver went on to triple the gains of gold made by 2011. So if we pull back to look at the bigger picture and the precious metals boom from 2001 to 2011, we see the same pattern several times. Silver lags gold, then more than catches up. So this is very interesting to see the percentage of change here from this graph from the Federal Reserve Bank of St. Louis. So very interesting indeed. Here's 2006, 2007. And look here back in the 2000s where both were very slowly growing. Gold was outperforming silver for quite a while. In 2004, silver spiked a bit. But let's take a look here leading up here. Even before the recession, which really the recession was towards the end of 2007, December I think is when it started, silver was still outperforming gold then. Of course, we didn't know we were in a recession then. But then we see the metals kind of move together. And then in 2009, gold kind of spiked up a bit, but that wasn't any different than it was back in 2007. In fact, right here is where the recession started, and I do disagree with the author here. By 2008, and we knew that there was a recession happening, and both metals were climbing together, almost in lockstep here. Now, in 2009, before the really big rally here, we did see movement of gold increased here, and then silver caught up but didn't surpass gold. It really wasn't until here in 2011. But I think 2011 was an anomaly, was not the norm. This spike in silver prices especially, I posted a video about why silver spiked that much, and it was due to an increased demand in the silver market. So it was essentially artificial. There was a bottleneck in getting silver out there. There wasn't a shortage of silver. It was a matter of getting the bullion out there. Nowadays, the reason why some of the silver prices, I believe, are somewhat low is not only has to do with the cryptocurrencies and everything else, but people just aren't as excited about silver anymore. But it is true that from 2011 onward, at least for that year, silver was outperforming gold by a wide margin. This is not the first time. If we look at the last major precious metals bull market in the late 70s, we see the same pattern. Here's a long-term chart showing the silver spike and its performance in the present day. And so, yeah. So, obviously in 1980, we had the Hunt brothers cornering the market of silver. Gold followed silver at that time, but really that was an anomaly. That'll never happen again. I can almost guarantee you that'll never happen again here. And again, as I mentioned, it was due to what I talked about earlier. It isn't rocket science. It's also not conjecture. I do agree with the author that silver is more volatile than gold, but I don't know that he's necessarily shown in this chart, that that it lags and then soars. I think in those two cases that was true, but those are very unusual circumstances. The next time, I believe we could see gold. I do believe we'll see silver close the gap, at least closer. But it may not be. I still stand with my original opinion that I think that silver will essentially get closer to the norm, but won't necessarily get to the norm again, at least anytime soon, unless something drastic changes. The best of all, as you can see, the alligator jaws of the right chart have opened wide. There's a major historical anomaly that can't last forever, but that's just it. It's an anomaly. Those are two anomalies that are unique in those particular points in time in history. It can't tell us what the future is going to be. So you have two examples really there, and that's it. Of course, this could happen by gold prices dropping just as easily as silver prices rising, and that could happen. I think there might be more indication, more proof that could happen than the other way. They can overreact with gold and underreact with silver, and they could even themselves out that way. Yeah, and he says the gold-silver ratio doesn't predict which metal will rise or fall as it gets out of whack. It just tells us that one or the other is likely to move towards the other. If you're a gold bear, you're probably not reading this article, so let's just stipulate that the fundamentals and technicals are very bullish for precious metals right now. That being said, gold is likely to fall compared to silver. Silver is likely to rise to catch up to gold, hence my claim that silver's day is coming in spades. The data tells us that silver's rise, whenever it's triggered, will be spectacular. And make no mistake, I believe the author. And even if you take out the aspect of silver being a monetary metal, which I believe it is, its attributes as a commodity could play a part in it. And that is essentially, even those who hate silver fully recognize that silver at least has a use as a commodity. So therefore, like any other thing, from pork bellies to wheat to corn to coal or oil, whatever commodity there is out there, silver's going to ride along with it. And even if we have only that to grasp onto, even though I do believe it is a monetary metal and a hedge, that is more than enough to be excited about silver and to hold on to it. And if the prices do drop more, even in a time of recession, it may even go below the value of inflation for the price at this particular point. But that can only last so long because of what's going on with the dollar and the fact that it loses value each year. So that intrinsic value will hold on and hold strong for quite a while here, I believe, and it'll reveal itself and it'll manifest itself in the time to come. So there it is. So very interesting indeed. Two different viewpoints, I think, and I do believe that I do disagree with the gold-silver ratio not mattering. I believe it does matter. And I believe it's going to tell us something, and I do believe that silver will eventually move along with gold at some level, in some way. They don't dance in lockstep with each other, as we saw from the other article. That's typically the case. They don't, but nonetheless, they are tied close enough together, and the fact that they're monetary hedges, I think, is something that will continue to be, at least for some time. So hold on. We'll see what happens as this year and next year make their way through time, and what's going on with everything in regards to geopolitics, trade, cryptocurrencies. I mean, Bitcoin dropped quite a bit today, if I understand, and so that's volatility people will get nervous about in time if it continues to happen with the cryptocurrencies, and then people want something that's not volatile. Well, gold is an example of a very nice performing precious metal that is not volatile but continues to go up. So it's the ultimate hedge, and this is why I tell silver bugs, people that love silver and almost exclusively love silver, I encourage them to try to get a little bit of gold at least to help to balance out your portfolios. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, share, comment, and subscribe.